said, this is a big week. Obviously, 171 S&P 500 names. We're all looking this Thursday. Thursday's like the Super Bowl of earnings, right? We have Amazon, we have Apple, we have all the big boys. So it'll be interesting to see, but I want to talk about some of the forgotten names. It's interesting to see. We're trying to find value in growth. Yes, Sully, I said it, value in growth. So when we talk about all the intensity, all the focus on Thursdays, and yes, rightfully so, the FAANG stocks, we have to swap out the N for the M, got to tuck in Microsoft, but we're seeing those FAANG stocks represent 22% of the S&P 500. So we all have exposure. I'm not diminishing the fact that we should have exposure to those stocks. But what about some of the software stocks? What about Adobe? What about Salesforce? What about Workday? What about some of these names like NVIDIA having a tremendous year? Look at AMD, kind of forgotten about, but last week when we saw Intel have a hiccup on their earnings, we saw AMD pop. So I think there's a lot of value in growth, but we're sticking with the tech theme. I remain constructive on the tech sector, Sully.
Wait, so what are you saying? Rotate from sort of the, I guess they called the FAANG man names, if you have the Microsoft in there, rotate from those into an Adobe or an Oracle instead?
Yeah, it doesn't really roll off the tongue as smoothly as FAANG stocks, but just like eating that fried chicken sandwich, Sully, let's get into it. And here we are talking about how do we rotate, how do we diminish our exposure? When you see 22% of the S&P 500 in 5 names, let's rewind a bit. Just here in 2019, we saw the concentration of those stocks represent 18% of the S&P 500. Let's rewind to the bubble, the dot-com period. We were talking about the most concentrated stocks representing 16%. So here at 22%, we certainly are focused, but it is interesting to see some of these names, some of the forgotten loved names really have a nice little boost. Now, on the other side, we are seeing the rotation. There are some industrial names that are catching a little bit of love here, but here in the S&P 500 above 3,200, the air is a little bit thin, but I do remain positive as the Fed is supportive. We will get the messaging, that articulation. They're going to continue to reiterate that they're here in perpetuity, in unlimited capacity.
Quickly, I don't know if we have time to bring it up, made a beautiful wall showing how Robinhood traders are getting all in on gold and silver. They've kind of put Tesla and Nikola behind them. And I don't know if we have time to throw it back up, but all this Fed printing, inflation concerns, the dollar has had its biggest monthly drop in like a decade. Do you think the silver, thanks, guys. Best team in the business, guys. Thank you. There's our chart. Robinhood traders, Jeff, getting heavy into silver and gold. Is that going to be a mistake?
No, I don't think it's a mistake, because let's talk about the Robinhood traders doing a great job catching this wave. But let's go back to 2018, that December of 2018, when we saw institutional traders really start to jump into gold. So you're looking at silver, the higher beta way to play the precious metals. It seems to be there's more room to run up there. But the U.S. dollar, you hit the nail on the head. The U.S. dollar weakening is really making those precious metals move higher, Sully.